All right. So let's take a look at where we are at after a little while here. If you remember, the bulls have been sampled. They picked up a risk reduction into the lows. They pinned the bears against the wall, and tension has come down to test zero, and this puts the bears in a really difficult position. So we moved up here right out of this. This was the decay retest, so that's where we're at. This line here is the bears position from yesterday that I think is significant right now. We have exactly no bears. I suppose grammatically it should be 0 bears, but we have no bears. I do not see any anywhere. And this is important. So if you consider that and you say, okay, there really are no bears, there's no institutions picking up liquidity for the short side. And then take a look at tension. What? Isn't that the question? What? What's going on here? How can you do that? Well, this is a burn-off. And we're so used to seeing a burn-off in the format of elasticity. And elasticity is where you have an instigator. You have the seller come in and they ride that burn down. Today we had no bear. It was like a bearless burn-off. Really, there was no counterparty. So this is releasing all that tension. We have bullish things going on here that have happened. We don't see any bearish things going on. So what's going to happen from here into the close if you're trying to piece this together? Well, the question that I've seen a few times, and I know this is a common thing to think, is to say to yourself, price did what versus tension did what, and to look for a divergence and try and extract something out of that. And I think you can sort of do that, but I think it's the wrong path to take. And that's because price rising does not mean as much as you think it does in terms of context. A lot of times we see price rising, and it could be from an inversion where we have the tick and the ES causing, let's just chart up here, the tick and the ES causing things and using the market mechanics to make that, to use those systems to drive things up. We see bears get trapped in and bulls pushing them out, and that's something that you would see. And so today you see the market moving up, and you might mistakenly correlate or equate today's rise with every other type of price rise. And I think that price rising has implications generally, meaning that when prices rise, that means things for everyone always. But I don't think it's effective to just look at price going up and equating that with some general statement. You have to look at the context. And today we have no bears. So if we don't have any bears, where is this going? And I mean no bears today, so from here forward. Obviously, I've marked out yesterday's, and you could probably tell why is because we don't have any data points for bears today, so it's not like I really have an option at this point. And yesterday's bears had some interesting things going on anyway. They held on and never dumped their position, which is suspicious. So I'm thinking about them today because they cheated. They front ran some information that allowed them to tolerate a large amount of risk, and they shouldn't have been able to do that. And I think they knew the information prior to the information being known, and it was right at the open. So likely prior to this open, there was some information known that hit the night before. So I think this is important, because the people who can do things like that on a broad scale are relevant decision makers. They're important people. They have connections and stuff. So I track them. Okay, so what's going to happen from here moving forward? A bearless burn-off. What does that mean? Well, it means that we haven't really seen the bears do anything. Like, we don't know anything about them. We don't know if they're going to hit, if they're going to step aside. We don't know if they're feeling aggressive. We don't know if they want to continue to try and dollar cost average into this. We don't know anything about them. For all we know, they could have dumped a majority of their positions just scalping a news event, and then let the market just go flat today. Why not? That's what people do, right? It moves down, you take some money, you say, well, we got it, and then you just wait, and the market doesn't really go anywhere. And that's kind of what we're seeing right now. So how does that play out in the future if we haven't done? Well, at some point, we need to sample the bears. At some point, it's got to happen. So you can see that this continues to move towards the bears. And this is a philosophy you really have to hammer into your head. This is getting closer to bears. Or in other words, it's moving towards bears. Now, this statement right here, I don't actually think this way, because I think it's sort of wrong in that it suggests that the market causes bears. And I think that's just inaccurate. I think that bears cause markets. So essentially, the more that the bears say we want to participate across the New York Stock Exchange here, the more the market goes towards them. In other words, this is not moving to the bears are moving to the market. So when you see that I say this is going towards, but you say, where are the bears? And you can see this is moving towards them. It will eventually get to that point. This isn't really, but that's where the bears would be. So where are the bears? Well, you could see they're steadily moving towards the market right here. They're just sitting right there. So if the market continues to do this, we're going to see it continue to do stuff. I mean, it could go sideways. It could move up. It could hang out right here. This could be a possibility space, right? You can almost do the square root of time. I don't know. The point is that there's nothing necessary about any of this. The only thing that really would matter is these stop losses on these positions. If this moved down, then what would happen is the market moved towards the bulls, because if they stop these out, that's going to be bullish liquidity. And that would mean the bulls move towards the market. And I think that what the bulls are doing is sitting back and watching. And they picked up some positions today, and they're just chuckling. This looks sort of terrible for the bears. So this is moving, the bears are moving closer and closer to the market, and this is where it's going to happen in my opinion. Now, obviously anything can happen, but I think this is what's going on. We had this crossover zero, and you're saying, oh, so it's negative. Yes, it is negative. And why would I care about that? Because it's negative? Absolutely not. I do not care about the current value. That's just not important to me. What's important is, what do you do with this? Well, if the bears can keep this down, or the market just does that, what's going to happen is that tomorrow the bears will have the opportunity to keep it down. If this gapped up, I mean, even like this right here, right? If it moved up that, it's still under, and they could keep that down. They're in control of the 30-minute possibility space, not the daily yet. So why would that motivate bears? Well, if you can control 30-minute, you are closer to controlling the daily. And I think that the focus is not this. The focus is, what do we do with this space here? Is it going to go like that? Or is maybe it curls up into the close and then gaps up, and we just see it was just a big fat bearish trap? Do we see the market move down, and then the bears keep control of it and they pump it further? You know, maybe in one of those patterns. Or does it curl up that day and then sample, and the bears get a chance to defend? They're not thinking about the things you're thinking about. They're thinking about tomorrow. Oh, we're going to have 30-minute possibility space. What are we going to do with it? Can we use it? How do we use it? And the easiest way to use it is to cause trouble for the bulls. And the bulls have had trouble. They had liquidity this morning that didn't quite work. They didn't pick it up. They were pushed back to a less desirable position. And that's okay, mostly because I think the bulls said, well, let's just wait. And that's why it's a nod. They said, let's just wait till it gets to here. And then they ended up with a decay retest, picked that up, and tension continues to move. So now the bears have this interesting situation, but they still don't have liquidity. So they're going to have the ability to control the possibility space on a 30-minute time frame, not a daily yet. but they still need that liquidity, and that liquidity is here. So first we get here, second we get here, and third we figure out what we're going to do with tomorrow. And the focus, I think, is just tomorrow. So far I don't see any reason to think that the participants are really looking at today. And the problem with this shooting up a ton is, who are you going to liquidate? Who are you going to take out? Whose position? Because there's no bears. So you can't curl tension up without a position to liquidate. You can't drive this up without somebody there. And I think the market's sort of running into that. The only people that could potentially be here is this group and this group. And I am really suspicious that they dumped. And they haven't continued to fill. And so we could maybe liquidate them, maybe. So we might see some grind up against them, and maybe it just, we sit on the backside of what could potentially be there, and any lingering bears who didn't have the wherewithal to jump out of this scenario would be the only ones there. So maybe, but that's not great. It's like a small percentage of those people are still there. I don't know if that sounds amazing to me. So I think that right now the most sensible thing to do for both people, both sides, is to wait for this to drift to here, which is likely going to be some format of not amazing movement. And then once we get there, the bears can participate. And this is where things will get interesting, because then we get to see, really, if the bears hit, are they going to be able to pump tension down like that? If they hit right here, are they going to be able to pump tension? Are we going to see them impact? Are they going to be able to continue that into the next day? Or are they going to miss, screw up, create a liquidation, and drive this up even higher, and we push a new high into the close? And right now, I don't see a reason for the bulls to really push, because there's no one to push out. I don't see a reason for the bears to jump in, because there's no liquidity, and jumping in now would just be early. I would wait until this finishes burning off before you try and put money into it. I wouldn't do that. I'd just wait. So I think there's a big precedence right now to wait. And the bulls, if they still want to push, and they decide that we're going to let the bears in and then we're going to liquidate them, then likely tomorrow we see up, and we're going to be getting to testing this here. And that could look something like, like that. That could be it. Right now, the bears have not been successful. They have not defeated the bulls. They did not take position and wipe out the controlling party. What has happened is the bulls were a little slow to pick up a position because of elasticity, which the bears did nothing about. The bears have not shown up to a great opportunity. It's important that you recognize that. There's no bears here. There were bears yesterday, and they don't seem to be doing super great today. So I don't have an expectation of the market dropping. I don't. It doesn't make sense. If the bears started to push right now, the first thing they're going to run into is daily tension. And that's probably going to get defended like a lot. So bears pushing right now would be absolutely way early and out of place. There's no liquidity. And what does that mean? Well, if you come into the market and you try to participate in any way, shape, or form as an institution, you pop the open interest through the roof. So if they just came in, no liquidity, they took a trade, all of a sudden the open interest shoots up. And what does that mean to traders when open interest rises? It means the capital in the market just went up. So the market cap, market cap shoots up. And when market cap goes up, the balance goes up. Prices will launch. They will not go down. You can't just jump in and create a bunch of open interest, especially on the short side, thinking that's a great idea. they have to wait for liquidity. If they pushed really hard right now, it would get folded fast because it would just be people putting money in. And as soon as they stopped directly pumping the ask and stuffing it all the way down, it would stop, turn around, and go straight back up and through their position. So there's no reason for this to do this. This is not a thing that the only reason that could possibly happen would be to take out these to create liquidity. And the only reason that would happen is if the bears decided to get gutsy and push. And pushing would just drive it into the hands of larger bullish positions. It would be a bad play. It would be so stupid for the bears to do that. It's not going to happen. And if it does, well, bears are stupid. And we've seen them do some stupid stuff. We really have. They've done stuff like that where they're just, let's just push. And it's like, okay, and then right into the close, that's it. And then it shoots up and gaps up the next day. So I don't think that's a reasonable play at all. I think the most reasonable thing is to try and expedite this process so that we can get some sort of sample before the market closes, and maybe we can see if the bulls are going to hit, if they're going to miss, what's going to happen, how this is going to work. If we can expedite that process, then tomorrow would be much more interesting. Right now, if bears don't ever get sampled, which they're going to get sampled, it's going to happen, then that means we have to do it on tomorrow, Wednesday. We have to find out if they're there or not. Then it'd be like the market closes, and then we'd have to some sort of sample in the morning and then see if they're going to be there. And it's like, come on. And we got plenty of time to get this up, sample it, see if they're going to play or not. Maybe they don't play. And if they don't play, this is going to be pushing a brand new high, no problems. I don't think there's a great case for the bears right now. The only way that you could say, I'm going to short this, okay, the only way is if you believe that these people were front-running something that has not happened yet, which, in my opinion, 2 days early is really early. Really early. In fact, stupid early. I don't think that's reasonable. The only other reason that you could possibly be short is you have some other analysis that suggests that there is... I don't know. I don't see it. But if you told me there was a whole bunch of short orders right here, I'd say bulls are going to plow through it because that's the most sensible thing to do. I don't think that a bunch of volume on the short side is a great... Like I said, if they shove it down, it'll be right into the hands of the bulls and it'll fold them over by tomorrow. It wouldn't be a smart thing to do. So I'm not seeing a good case for the bears. In terms of the bulls, you're going to run into this one really hard philosophy, which is you can't just buy. I mean, you could, but you buying here, you have to share the stops with the origin. Okay, the people who started the trend. You don't get to buy in late and then have a nice, easy time. If you buy in late, you have to be willing to share your stops. And if you're going to do that, if you didn't get into this zone here and your stop isn't at break even at this point here, that means that you could get in here and it could literally just destroy you and do nothing to the origin, which means your risk is just really high. This is like a hold situation. If you're in long, you should hold long. This has the context of let's move up higher. Everybody sees the upside looks much, much better than the downside. If you're short, you should be sitting here going, crap, your only option, and this is the wrong option, don't choose it, is to wait for this to happen, which is stupid. That would mean you're going to try and dollar cost average a loser, which is the wrong play. Don't do that crap. You need to dollar cost average your winners. I don't see a reason to short. This is drawn out. We're looking, the market's eyes are not here. The market's eyes are here first. This is what everybody's looking at. It's the next bearish position. Where's the bears? We got to go find them. That's it. That's all we're looking at. We're not looking at other stuff. And then the next thing after that, so we're sort of looking through that at this. We're like, okay, well, if we get the bears in, what can they do tomorrow? And if they can't do anything, really this bearish position is just going to be a great reason to go for a new high. And that's it. If they can't come in and hit with all the force of, I don't know, whatever it is that they use, if they don't come in and actually try, they're going to be in a bad position. And at the same time, it's like, why would you do that? Why would you sell this? Why? Your cheating days ended badly. Your tension's under zero, so it's not like there's nowhere to run. So they would literally be trying to pump tension. And we all know the best way to pump tension is to take out the opposing party. If bears want to pump tension, what they really would need to do would be, I don't know, get it up here. Let's say that's the bearish position, right? They need, where's the closest set of bulls? It's here. So that's what they would need to do into the close. Do we have time to drive this up and then all the way back down out the lows, just so they can curl this down a little bit and get themselves stuck in a situation where the bulls are controlling daily, the bears are selling into this sell-off, and it's probably going to gap up and run them all out. Hey, that's stupid. That's so dumb. Don't do that, bears. But if you do, thank you, because that'll give me an opportunity to take advantage of you, and that's not so bad. So we could see right now that this is a hold situation. It would be difficult to buy because honestly, sure, it looks nice. Yeah, I've been talking this movement. Sure. But really, you would have to be tolerating the same type of risk as the people who started the move, who were able to pick up on what was going on much earlier today. And that means you're going to have a higher bit of risk on your hands. Is that bad? Well, it depends on how you feel and think and how well you do it, understanding what's going on. If you understand what's happening and you have tools that say, let's take advantage of this scenario, well, you could probably take advantage of it. Personally, I think if you didn't see it as it was developing, you didn't see it. Getting in late doesn't, I don't know, do what you want. So that's where we are. The whole goal here is just sum this up, sample bears, and 2, tomorrow's 30-minute tension. Those are the two things that we're looking at. And you have to sort of think, how can the bears make this work? Because they're stuck in a really crappy situation right here, as far as I'm concerned. So how can they make this work so that tomorrow they potentially could take over daily tension? If that's their goal, can we get daily tension down to and possibly through 0 tomorrow? I'm skeptical, but that's what the focus is right now. So first up, and then look at tomorrow and where everybody's positioned, and it's going to give you a pretty good idea what's going to go on. If the bears don't hit, they're going down, and we are headed straight through the highs. Okay, I hope this was useful. Good luck, guys.